Welcome back to the Mortgage and Marketing Update. I'm Brian DeMarie. I'm a loan originator with Union Home Mortgage and the DeMarie lending team. So I'm filming this on Friday. You're watching this on Monday. BLS Jobs Report has come back today. It's a Bureau of Labor Statistics for February. Numbers have come back way stronger than expected. And previously, these were really market-moving reports, but lately they haven't been. This one's different. Revisions come back as well. Oftentimes they will revise older reports on these newer reports. Those numbers are up as well. And so all of these are positive numbers. They're not really where we need them to be, but we'll take what we can get at this point as far as jobs creation. Hourly earnings are up as well, but that doesn't really measure how much money they're taking home because people could simply just be working less hours. Some of you realtors know this, as we have had many conversations about how we're qualifying their income. So we're looking at weekly earnings more than hourly earnings. And those are up as well. And frequently, instead of just hiring somebody, they'll just let them work overtime or they'll let them work more hours. And that'll help instead of them having to pay all of the costs of actually hiring a new employee. So unemployment, although it says it's in the 6s here, we know that it's really closer to 10%. A lot of people get miscategorized. And then they're not categorized as looking for work. They're not looking at all because of COVID. So they get mischaracterized or they get miscategorized as well. And so Jerome Powell, Fed chair, also agrees with these figures that it's closer to really like to 10%. Remember, we got about 20 million people that are totally out of work if we were to include all of the unemployment assistance programs happening right now. So markets have been moving since Thursday. Jerome Powell did address the public talking about how he's pretty tolerant of inflation right now, kind of a negative for the bonds market because remember that inflation is the driving factor of interest rates. And if the Fed is not going to defend that inflation, markets are going to move as a result of that. Remember, the Fed hasn't raised rates on their own in a long time. And when they do, it's usually pretty favorable to mortgage bonds. But the bonds market is basically kind of saying that, look, if you're not going to do your job, Jerome Powell, we're going to do it for you. So remember, if you are not working with Lily and I, you are settling for less than you deserve. If you have a lead that wants to buy a house or refinance, all you have to do is text us over their number. You can three-way text us, introduce us to the buyer. That way, we will reach out to them, get them pre-qualified, and follow up with you. All these videos are backed up on YouTube. All you got to do is type in my name. Check us out on Instagram. Talk to you tomorrow.